Welcome to the Property Nomads Podcast. Welcome to the December show with Marc Champ. We are recording this before England's quarter-final with France. So it's either massive congratulations, well done England, you've done great, or unlucky England, same crap, different year, better luck in 2024. I don't know what way it's going to go, but there's both of your answers, hypothetically. Marc, thanks for joining us again. People have been asking us to review our sort of 2022 predictions. We'll do that at the start of 2023. We'll have a much longer episode and go back and look at 2022 and predict for 2023. So for those people that are wondering when that's going to happen, that's going to be in January's episode. Looking at economic news, apart from everyone being on strike and people complaining about coal plants being built, yada, 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 we're here to talk about property and shrinking workforces, which is going to be an ongoing theme. Mortgage rates starting to come down ever so slightly along with house prices. But then again, when you sort of hit a peak or go up, coming down is going to be inevitable. That's what I've seen. I took that from Wharf Financial's wonderful newsletter, by the way, so thank you. What else have you seen in the last month?
Well, it's been quite a different month to what I've ever experienced. The start of the month, I was thinking, where's the next deal going to come from? Where, we're not seeing that many people embark on new projects. And it was quite strange because that's what I was expecting. And I thought that would continue through. But in the last 2 to 3 weeks, probably 2.5 weeks, we've been as busy as we've ever been. People looking at different projects, different ways to maximise the value on properties. And we probably had more inquiries this last week than any time in the year. So I presume that's because the rates have stabilised a bit, even though we're probably going to see the Bank of England's base rate go up again next week. But the rates have stabilised. What hasn't stabilised is the timescales lenders are taking to get deals out the door. The system's broken with the challenger banks, in my humble opinion. You try and talk to somebody and you're told an SLA is an SLA, you need to wait that long. And then when it's outside of SLAs, they say, oh yeah, we're just taking a little bit longer at the moment. And it's like, yeah, but your SLA is ridiculous anyway. So I think that's something that needs to change in 2023. I think challenger banks really need to take a long, hard look at themselves and work out what they're going to do. And I get really tempted. I use LinkedIn quite a bit. And I get really tempted to call the challenger banks out on it and say, why is it taking so long? And, this is the scenario. And we don't do it because we support the challenger banks. But it's got to the ridiculous level now where rates are quite high, so they're not probably getting the same volume as they were. But the backlog's not getting shifted. It's taking forever. And it's really difficult for us as brokers because you ring up the lender, you can talk to an underwriter, and they're really nice people, and you talk to them, and they're hamstrung. They're just we can't do anything. So it's not fair on them either. But something needs to be done going into 2023 with the challengers, in my opinion.
Couldn't agree more with you on that. Maybe I'll add that to my success list for next year. I have no issue calling these people out if necessary. And I'll back that up by saying one of the projects that we're working on with yourself at the moment, we've all gone through that experience in the last 2 or 3 months, haven't we? Where I will check in with you once a week, sometimes twice a week, Monday and a Friday. Has there been any update? And from yourself, it's been more or less the same. It's like, no update, there is no movement, and it's taken a few months. Ultimately, we'll get there in the end. So it puts you in a difficult position, and for someone like myself, who I like things done yesterday, but still 2-3 months, and it's hardly any movement with a lack of communication from the challenger banks. Doesn't make life easy for anyone involved.
Yeah, and they hold their hands up and say it's going to be a 30 working day SLA, and they do put that forward, but they don't give you it's in this part of the queue, or it's anything. It's going to be looked at on this day. It's just really frustrating, and you try and escalate it, nothing happens. You can't do anything, and something needs to be done, especially with consumer duty that's coming in. And consumer duty is all about protecting customers and making sure they're kept up to date, and making sure that they know exactly what's going on at all periods, and they're being looked after. And for me, these SLAs are not within that the spirit of consumer duty. So I think something needs to change, and I think it needs to be done sooner rather than later, because I think property continues to be an attractive investment, and people, even because inflation's gone up, their salaries aren't worth as much potentially in the real world, and people need to make money elsewhere. So I think property will continue to be an attractive investment, and there'll be more business for lenders. So it really does need to be sorted out.
Sounds like a plan to me. Well, we can I'll add it to my to-do list for next year, and or at least try and get someone on the podcast from some of the challenger banks and have an open, frank discussion about that. Because as I say, it almost creates a lose-lose situation where, although as a customer, I've got a few years' experience in property. If you're dealing with someone that might not have as much experience, they might get frustrated. They then might think the broker's not doing the job properly, which of course that's not the case. And then the broker's thinking, well, I'm in a difficult position here because I've got to keep my customer happy, but I'm also getting nothing from, the top. So absolutely. I'm surprised to hear though that you've been quite busy in the last few weeks, because normally, generically speaking, end of November, December, normally quite quiet in terms of what's going on. But I think that just caveats everything we've said before about there's always opportunities and there's always ways to add value. So we're not talking about, buying a £200,000 buy to let and let's watch it fall in value in the next couple of years. I'm going to be guessing the people you're dealing with are, I might have a pub. How do I convert that into apartments? So I've got this office space. How can we add value and convert this and do that? And that there's always opportunities out there.
Yeah, definitely. We've got one at the moment. Somebody's got a retail unit with 2 flats. They want to build another 2 flats on top of that. We've got people who are buying terrace houses, turning them into HMOs. We've got people who are buying warehouses, turning them into flats. It's all different types of ways that people are looking to add value to properties. We don't get so much of people buying a buy-to-let and just buying a buy-to-let. It doesn't really happen anymore, and it's good for us. It's good for the customers because invariably they can make a higher yield and maybe add extra value. But it's also good for the housing problem because you're splitting a unit into many units, and that is helping, I presume. And I see that the government has scrapped their targets for new homes now, which is a bit of a surprise because we need more property, we need more houses. So it's going to be interesting to see if how the market reacts to that. And I think there's always going to be a place for property investment in the market. And I think the more people learn about it, they educate themselves and do their due diligence on different areas, I think the more successful some property investors can be.
And then when I speak to various investors, either abroad or here in the UK as well, there seems to be this something that we we quite possibly take for granted here is political stability. Now, I know you might listen to that and laugh, and I want to laugh at the same thing. But if let's just say you're based in, a few people I know are based in Hong Kong, for example, they're expats, they're buying over here. Well, political stability, they look at the UK and go, you're relatively politically stable. You're not going to have a mass junta or a coup d'etat happening, at any point, and or anything like that. Obviously, Hong Kong's got its own issues at the moment with the Chinese government, etc. So people do look at the UK, and we are relatively politically stable. Now, we might not think so because we live here, and it's always backbencher this and this and that. But the odds of having a rising up and an armed resurrection, relatively minimal in comparison to a lot of countries. Secondly, on that, the legal system. Now, I know it drives people through the wall. It drives all of us up and down the wall, round the bend, you name it. But if you go and buy a home, for example, the minute that's on land registry and you've got all those deeds and those documents, I mean, that's pretty secure. There's normally no argument about that, and our law's been around for 1,000+ years.
Safe as houses.
Exactly, as safe as houses. So that's going to help as well. The other thing that might help that I read, and you included this in your newsletter as well, with obviously the changes in capital gains allowance that are happening from April and moving forward, a lot of landlords are now looking to sell up. So that might increase the supply as such, which might affect prices one way or another. So we've got to take that into consideration as well, because good old Jeremy Hunt and co are stealth taxing the hell out of all of us.
The thing with property is it's a long-term game. You buy now, invariably it's going to go up in the next 10, 20 years. If you buy now and you're going to sell next year, you may not make a profit. Property's a long game. You can make money on it, but it's not going to, well, every now and again you can make quick money, but invariably it's not a quick game. So forget about the little schisms and little, things that happen in the market that we see on the news and the media sensationalizes them. Make sure you plan for the long term, have an investment strategy. And I always, I have a wealth manager, and we plan for when we retire. So the end point is when we retire, to make sure we've got enough money for retirement. And that's the way you need to look at it, not shall I buy this property and flip it and gonna make loads of money and just keep doing that. That form part of your strategy, but make sure you've got a full strategy of where you want to be in 20, 30 years' time.
And that's why they always say know what the end goal is before you start.
Yeah. I forgot who wrote that book. Start with why.
Yeah, the name eludes me. I will Google it though as we're on.
Yeah, I can't remember who it is.
Bear with me a second. Start with why. Simon Sinek.
Yes,
that's the one. I'll add that to my Audible at some point. No, absolutely, couldn't agree more. It's I don't want to beat the same drum. I'm going to beat the same drum anyway. There are always opportunities, no matter what's going on economically. There will always be opportunities within the housing market, one way or another. That might be buying opportunities, selling opportunities, development opportunities, taking advantage of various changes in laws and legislation. There will always be opportunities. And I know you probably get fed up, listener, hearing us say the same thing over and over again. But the fact is, it's completely true, and it's very pertinent advice.
Yeah, it definitely is. And I did a presentation a couple of weeks ago about the perfect storm. And for me, at the moment, it is. There's loads of stuff going on. Other people are worrying about stuff. This is the time to look at property. This is the time to start working on what your strategy is, because you've got an opportunity. It's easier now, in my opinion, than it has been. So, yeah, I want to present more to people, because I think there is a message that we put across that other people don't. I think a lot of other people are just doom and gloom, but I think at the moment everything's going on around, but there's a little sweet spot that you can get to. And we've also just finished an ebook that we've written, a guide to property investment, not property investment, to property finance. So if anybody wants a copy of that, just let us know and we can email that across. That's no problem at all.
Perfect. And as usual, in order to get hold of Marc and Wharf Financial, please go and look in the show notes. Go and contact Marc. We will return in 2023. We will have a look at our predictions that we made in 2022. We'll make some predictions for 2023 and moving forwards. I would say is use a generic advice here for December. Use your time to, as Marc's pointed out, do some planning, think about things, look at your goals, look at your targets. Christmas and New Year's are a perfect time to do it, purely because a lot of people have a lot of spare time. So please do go and do that in December. We will catch you in January, and maybe by then England might be world champions, and if so, we'll start that podcast with a party. But until then, have a great Christmas and speak soon. Marc, thank you very much for your time this year. I really appreciate it, and have a good Christmas yourself, and look forward to catching up in 2023.
And to you. Speak to you soon.